Hello traders and welcome to another video review. Today is Monday, January 17th, 2022. We are going to start with the Forex calendar review. Real GDP data from China had been published overnight and they beat the expectations. As we can see, the actual reading was 1.6%, which was better than forecast of 1.1% and way better for than the last quarter of 0.2%, of course. So this is the quarterly GDP from China year to date. The overall GDP is 8.1%, which is worse than the previous reading of 9.8%. The fixed asset investment is at the level of 4.9%, which is in line with the forecast, but worse than 5.2% last time, and the industrial production is going up 4.3%, better than 3.7% forecast and better than last reading of 3.8%. Unemployment rate is slightly increasing from 5% to 5.1%. During the London session, we don't have too many data that will have a definitely big impact on the markets. We got the wholesale price index from Germany and Bundesbank monthly report scheduled for this at noon. During the New York session, we have data from Canada in form of foreign securities purchases, manufacturing shipments, and overview of the business prospects according to the Bank of Canada. So that's everything from the Canada during today's New York session. So I think we should take a look at the euro dollar first, and then we will take a look at the Australian and New Zealand dollar, because they are highly connected with the Chinese economy. They are so-called commodity currencies. The euro dollar on the daily time frame chart has been capped at the level of 1.1483, which is just below the key technical resistance at 1.1501. So as you can see, there is a very interesting signal here. This is a bearish engulfing, which ends that bounce from the November last year. So it lasted almost 2 months to get here, and as you can see, breakout above the channel. This is a multi-month channel. Is not that easy apparently. Even if we break above this technical resistance 1.1425, now of course it will act as a technical support, but it will be weak support anyway. The other support is in at the levels of, let me just put it on the chart for you right now. The key technical support right now in the short term is 1.1383. The other one is located at the end of this consolidation zone at 1.1273. So that's the local technical supports. Momentum is still positive. It's not that strong, but it's still 57 points. However, please take a look at this channel now. It's multi-month channel. It started with the in the end of the May 2021. It's more than 6 months. Okay, so we got the occasional breakout to the downside, false breakout to the upside. It still looks like a false breakout because we need to break above 1.1501 and higher in order to see this low, to treat this low as the swing low and possible trend reversal. But so far, the euro dollar has been a rally or a bounce, maybe that's a better word. Bounce has been capped right now. If we break below 1.1383, that would mean the market might extend the drop back to the trading range. So as I said, Australian dollar. The Australian dollar has hit finally the 100% Fibonacci extension right here, so that's a very good news, and it looks like our wave C has been completed here. However, right now this market is I think is trying to evolve into more complex and time-consuming correction, because it is clearly a kind of a corrective pattern. It's not an impulsive pattern right now. So maybe, just maybe, we are right now witnessing the high at the level of 7,315, just above the 100% of the Fibonacci extension. So right now this level is no longer used for us. We of course have the local technical resistance at 7,315. The breakout below here means that the market participants are still considering the continuation of the down move. If we add 61% of the Fibonacci retracement, because 50 has been violated already many times, but it holds the bullish pressure. 61% is at 7,345. It's not that far away from this high. However, we are again below this trend line. So because we have a new data, maybe we should do this, right? So we have the new data, we managed to change our trend line, and look at this right now. We got a nice channel here into the 50-61% Fibonacci retracements, and if we break below 7,189, and especially because below this low here from the 7th of the January at 7,131, the market might return to the down move, as we can see this down move here. So that's just some sort of a bounce, as you can see, in the form of the ABC, maybe X, and then ABC, and then down move here. So please pay attention to this movement on the Australian dollar. New Zealand dollar. The New Zealand dollar daily time frame chart looks somewhat different than Australian dollar, despite the fact that they are kind of a similar currencies. Breakout below long-term trend line, marked orange in this chart. Lows at around the level of 6,698. Corrective bounce ranging market around 7,800, finally burst to the upside, capped at 6,880. So we got this pin bar, kind of a pin bar-ish candle on a daily time frame chart here, and then confirmation of the decline. So this is our down trend, right? This is the last swing down. This is clearly corrective. What's the problem here? That trend line is the problem, because bears and bulls are fighting for this trend line, right? Why? Because this is a long-term trend line. It's more than 1 year old, and initially we got a breakout, then bulls tried to break back above it. Technical resistance, key technical resistance, 6,857, 6,880 pips, which is only 23 pips wide. Technical resistance is still preventing bulls to rally. So if again we break a little bit below this level here, 6,745, we might return to the downtrend again, because this is our swing down. This is our down wave here, and it looks like after this fight for that trend line will be won by of course bears. We can even assume 6,502 pips to be hit soon enough, right? So please pay attention to current price action on the New Zealand dollar and how the market participants will resolve this battle for technical support and for the long-term trend line here. And last but not least, let's take a look at Bitcoin. After the weekend, Bitcoin tried to rally, but in the early hours of Monday, as you can see, we are trending horizontally. There is no momentum to the upside. We are still below the level of 50, around the level of 39, 36, 37 on the RSI. So that means we are trendless. However, what is unsettling is that we don't see any sort of a bullish movement. We don't see a wave of buyers coming into this market after this short-term trend line had been violated and the market is out of the channel. So we need to see 45,429 violated, and then bulls need to head towards the key short-term technical resistance 51,846, 53,228. Without this kind of move, we will not see any sort of the progression to the upside. So please pay attention for a possible breakout to the downside, and that's not good. That's definitely a very, very bad situation, and we will see lower levels below $40,000 towards 30,000. If we break higher, then of course there is a chance for up move continuation, but we are still into the negative territory, ruled by and controlled by bears so far. So that's my analysis for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.